Assalamu alaikum. I appreciate the opportunity to speak with you today. My name is Mubashir Hussain and I am BBA 8 finance student at Kafute. Today I will be delving into the interact world of financial analysis, specifically focusing on the ratio analysis and financial statement analysis. Our spotlight will be Pakistan Telecommunication Limited, where will be distract its financial statement and employ the ratio analysis to gain valuable insight into the financial health and performance. Understanding the financial dynamic of PTCL is crucial in the evening of evolving landscape of telecommunication. Through the analysis, we aiming the unveil pattern, access efficiency, and draw meaningful conclusion about the company overall financial position. As a student of finance, I have dedicated my study to comprehending the interacting the financial structure, and today I am excited to apply the knowledge and real world example of with PTCL. Firstly, I present to you financial statement of profit and loss or income statement. We have a 3-year income statement 2020, 21 and 22. In 2020, we have a revenue is at 71 billion and minus the cost of sale we have the gross profit में से हम total expenses minus कर देंगे तो when we have a operating profit, then we add other income, then minus the interest or finance cost, then we have a profit before tax, then minus the tax, and we have a profit after tax. Similarly, in 2021, we have revenue is 76 billion, then we minus the cost of service, then we have gross profit, total expenses minus from the gross profit, then we have our operating profit. After the operating profit, we add the other income and less the finance cost, then we have a profit before tax, and less the tax, and we have a profit after tax, also called net profit. Similarly, in 2022, we have a revenue 83 billion and something, then we minus the finance cost of service, then we have a gross profit, then minus the total expenses, then we have a operating profit, and then add the other income and less the finance cost, then we have a profit before tax, and less the tax, we have a net income that is 9 billion something. After reviewing the income statement, we have a balance sheet or statement of financial position of 4 years. Firstly, we have a shareholder equity, then share capital, revenues and unappropriate profit, which is here, and liabilities. Firstly, non-current liabilities, then current liabilities, the total liabilities, total equity and liabilities are here. After equity and liabilities, we have asset, non-current assets, and then current assets. Here is the total assets. After the financial statement, we analyze the financial ratio. Firstly, we discuss the profitability ratio. Profitability ratio are financial metric that measure the company ability to generate profit relative to its expenses and other costs. Some common profitability ratio include gross profit margin, net profit margin, and return on equity. These ratio help investors and analytics assess the company profitability and financial health. In profitability ratio, we firstly discuss the return on ordinary shareholder fund, also called return on equity. The formula is equal to net income divided by ordinary share capital plus reserve plus retained earning multiply 100. We get this figure from income statement and balance sheet. Like net income is in income statement, which is a here, then other are in shareholder equity in balance sheet. Then put inside the formula, we get the ratio 6.41%. Similarly, in 2021, which is a 6.9%, and 2022 is 8.38%. Next ratio is a return on capital employed. It's mean the company get return from its capital employed. The formula is operating profit divided by share capital plus reserve plus retained earning plus non-current liabilities multiply 100. The figure is get from income statement and balance sheet. Like the operating profit, which is here in income statement, and the share capital, reserves, unappropriate profit and non-current liabilities is get from balance sheet, and then equal to the 2.5%. Similarly, in the 2021 is 2.93 and 2022 is 2.73. Next is a gross profit margin. The formula is gross profit divided by sale revenue multiply 100. The figure get from income statement. To find the gross profit margin, gross profit divided on the sales revenue of 2020, which is here. Similarly, in 2021 and 2022. Next is the operating profit margin. To find the operating profit margin, the operating profit divided by sales revenue multiply 100. Both figure are in income statement. Operating profit divided by sales revenue equal to 4.8. Similarly, in 2021 and 2022 is 5.85. You can see all the profitability ratio increasing with the sales, except the return on capital employed in 2022, because the sudden increase in non-current liabilities. The efficiency ratio is a financial metric that measures how effectively a company manages the expenses and assets to generate revenue. The efficiency ratio is typically calculated by dividing operating expenses by net sale. It helps us how well company utilize its resources to generate its profit. In the efficiency ratio, firstly we discuss the average inventory turnover period. Formula is average inventory held multiply 365 divided by cost of sale. In this ratio, we analyze the company how much time take to turn inventory into finished good or service. Firstly, we need average inventory held. We get it from balance sheet and take it average of 29 and 2020. Get cost of sale from income statement, then put it into the formula and get answers. This 29 day, the average inventory period in 2020 is 29 day. Similarly, in 2021 and 2022. Next is the average settlement period of a receivable. Formula is average trade receivable multiplied 365 divided by credit sale revenue. In this ratio, we analyze the company how much time take to settle its receivable. Firstly, we need the average trade receivable. It get from a balance sheet and take it average of 2029 and 2020. Similarly, in 2021, average is 2020 and 2021. In 2022, the average get 2021 and 2022. Then we need the credit sale revenue. It get from the income statement. Put in the formula and get the time period. in 20 is 110 and 21 is 121 as and 22 is 147. Next, we have an average settlement period of payables. Formula is average traded payables multiplied by 365 divided by a credit purchase. In this ratio, we analyze the company, how much time taken to it payables. Settlement. When we need the average trade payables, we get it from balance sheet and credit purchase, which are get from reports because it's not mentioned in the financial statements. Then put in the formula and get the answers. 1009 and decreasing yearly. Next, we discuss the sale revenue to capital employed. Formula is the sale revenue divided by share capital plus reserve plus retained earning plus non-current liabilities. Sale revenue is get from the income statement, and the capital employed, which is share capital, reserve, retained earning and non-current liabilities, are in balance sheet. Then put into the formula and get 53 point something is in percentage. Next, we discuss the sale revenue per employee. Formula is sale revenue divided by number of employees. In this ratio, we analyze the how much sale generate employee. Sales revenue get from the income statement, and number of employees are found from the reports. Then put into the formula and getting the answers. In 2020 4.4 million, in 2021 is there 4.7 million, in 2022 is 5.4 million. Liquidity ratio are financial metric ratio that measure a company ability to meet its short-term obligation and convert asset into cash. They help assess a company liquidity and ability to cover its current liabilities. Some common liquidity ratio include the current ratio and quick ratio. These ratio provide the insight into company financial health and its ability to handle short-term financial obligation. In liquidity ratio, firstly discuss the current ratio. The formula is current ratio is current asset divided by current liabilities. Current asset also in the balance sheet and current liabilities also get from the balance sheet. In 2020, the current ratio of PTCL is 0.86 times, in 2021 0.76 times, and in 2022 0.85 times. Next is the quick ratio. Quick ratio formula is current asset minus inventories divided by current liabilities. Quick ratio of the PTCL in 2020, the current ratio of PTCL is 0.86 times, in 2021 0.76 times, and in 2022 0.85 times. Next is the quick ratio. Quick ratio formula is current asset minus inventories divided by current liabilities. Get all from the balance sheet. Quick ratio of the PTCL in 20 0.82 times, in 2022 is 0.71 time, in 2022 0.79 time. The financial gearing ratio is also known as the financial leverage ratio. This ratio measures the proportion of company total capital that are financed by debt compared to equity. It helps assess the level of financial risks a company carry and it relies on the debt for funding. The higher the financial gearing ratio, the higher the financial risk. It is important metric for investor analytics to evaluate the company financial structure. Firstly, we discuss the gearing ratio. The formula of gearing ratio: debt divided by share capital plus debt. In 2020, PTCL 1.38 times able to pay its debit. In 2021, 1.47. In 2022, 1.82 time. Interest cover ratio. The formula is interest cover ratio is operating profit divided by expenses. In 2020, 7.5 times PTCL able to pay its interests. In 2021, 12.2%. In 2022, 2.5% able to pay its interest expenses. The investment ratio. The term investment ratio is bit broad, as there are several different ratios can fall under the category. Some common investment ratio include the return on investment, price earning ratio, dividend yield ratio. So, these ratio help investor access to the profitability, valuation, and income potential of the investment. Firstly, we discuss the dividend payout ratio. The formula of dividend payout ratio is dividend announced for the year divided by earning for the year available for dividend multiply 100. The dividend announced for the year are in the cash flow statement. Getting from the cash flow statement, earning is available in income statement and then put into the formula and get answers. PTCL paid 42% dividend in 2020. Next, we have a dividend cover ratio. The formula is earning divided by dividend announced for the year. PTCL 2.36 times able to pay its dividend in 2020. The dividend yield ratio. Dividend yield ratio show the annual dividend income of a company relative to its stock price. The dividend yield ratio is calculated by dividing the annual dividend per share by stock current price. It's help investors as to income potential of the investment in dividend payout stock. A higher dividend yield ratio indicate the high return on the investment in yield in the term of dividend income. Dividend yield ratio in 2020 PTCL is 1.87%. Next is the earning per share. Formula is earning available to ordinary shareholder divided by number of ordinary share in issue. The earning available is in income statement and the number of share are available in the reports. Earning per share in 2020 0.4, in 2021 0.46, in 2022 0.60. Next is the price earning ratio. The formula is market value per share divided by earning per share. Price earning ratio in 2020 is 22.75%, in 2021 18.91%, in 2022 10.17%. Despite the unable to pay 2-year dividend, PTCL have potential to able to maximize its shareholder wealth.